If you've ever wondered how to start investing without putting all your eggs in one basket, or maybe you've heard people toss around the term ETF and nodded along, pretending you knew what they were talking about, today, I've got you covered. Let's unlock the secrets of ETFs, and I promise it's simpler than it sounds. First things first. ETF stands for Exchange Traded Fund. Think of it like a big basket that holds a bunch of different investments, like stocks, bonds, or even gold. When I buy a share of an ETF, I'm snagging a tiny piece of everything inside that basket. It's like getting a sample platter at your favorite restaurant instead of ordering just one thing. Here's why ETFs are so popular. Unlike mutual funds, which only trade once a day after the market closes, ETFs can be bought and sold anytime the stock market's open, just like regular stocks. So I get flexibility, plus I can see the price in real time. Most ETFs are passively managed. That means instead of a fund manager trying to beat the market, the ETF simply tries to match a market index, like the S&P 500. This keeps fees super low. In fact, the average ETF expense ratio is only about 0.15%. That's way less than actively managed mutual funds, which average around 0.42%. More money stays in my pocket. One of the biggest perks? Diversification. Instead of gambling on a single company like betting everything I have on one horse, I'm spreading my risk across hundreds of companies. If one flops, others can pick up the slack. And let's talk taxes. ETFs are usually more tax efficient than mutual funds, so I'm less likely to get hit with a surprise tax bill just because someone else sold their shares. Plus, ETF holdings are typically updated every day, so I always know exactly what I own. There are tons of ETF flavors out there. Stock ETFs, bond ETFs, sector ETFs, like tech or energy, commodities, and even some that let you invest in Bitcoin or Ethereum. But quick warning, some of the complex ones like leveraged or inverse ETFs aren't for beginners. To get started, all I need is a brokerage account. From there I can browse, research, and invest in the ETFs that fit my goals. But remember, just because ETFs are easy doesn't mean there's zero risk. Do your homework, check the expense ratios, and make sure the ETF matches your investment style. So, that's the basics. ETFs can be an awesome way to build a diversified, low-cost portfolio with just a few clicks. If I can get started, so can you. Want to learn more? Hit that subscribe button.